really? Standing room only. I guess this is a very popular topic, and we're all very, very curious to what these amazing people have to say and tell us about what's happening on the Web3 world from the VC side. So I'm going to just hand it over to you if you guys can introduce yourselves and then your company, where you are, and then dive into questions.
Awesome. Hello, everyone. I'm James Wu. I'm a partner at M12, which is Microsoft's venture fund. We typically invest in the infrastructure side of Web3. So think security, big data, AI, less so on the NFT side. So if you're doing anything NFT related, I'm not the right person, sorry. We are early stage investors, so we typically write $2 to $10 million checks. We can lead, co-invest, but more details to come.
Hi, I'm Sallie, Jian, and my mic is much louder for some reason. And I'm with SAP, another big software company, and I'm on a team called SAP.io, and it's our corporate ventures, corporate innovation team. And we work with startups multiple different ways, but primarily through our accelerator programs, which are called Foundries. And we work with startups that we believe can really partner with SAP, add a lot of value to what our customers are looking for. So they're enterprise software companies, but we are really interested in exploring Web3. And I am leading our SAP.io Web3 efforts. So thank you for having me here. Love to meet many of you in the audience here today.
Hi, I'm Raymond Liao. I'm from Samsung Next Ventures. I'm one of the founding MD, been with the fund for about 10 years. That's how old our fund is. Samsung set up this new fund to go after software and service innovations. So last year, we started, increase the pace of our investment. We made about 90 new investments last year, basically one new deal per week.
Wow.
About 30% are in Web3, right? So this is actually very, I would say, synergetic to Samsung business, right? Samsung, you remember making, endpoint devices, right? Phones, TVs. Now you think about this, okay, Web 1, Web 2, now Web 3. Swing back to what? Very synergistic to Samsung's customer base, to the brand as well, right? So we are very bullish about the Web3.
Wow. Well, I think we're all bullish, and that's why we're all here. But I just want to say, we're bullish in this market, but it is a bear market. So I'm just going to ask the question that's on everybody's mind. It's on my mind. What is the market looking like from your perspective on the other side of the fundraising table?
Yeah, I'm sure we've all gone through multiple bull bear cycles, and that's why we as a venture fund exist. If you talk to Microsoft Corp, whenever there's a bear market, they'll point at it and say, look, market's down, let's stop investing. But M12 exists as an independent venture fund so that we can continue to push the envelope and to continue to invest in innovation. Not necessarily 90 investments, but we've made 4 investments in Web3. So, decent.
I think that, being a part of a corporate venture, getting strategic investment from some of the folks on this stage is actually, it's not so much about bear or bull market. If the solution that you're creating adds a lot of value to what the corporate is looking for, what we're doing, can integrate with our technologies, can help us deliver on go-to-market with our customers, there will be a need and desire to work with your startups. Enterprise problems don't stop with a bear market. They continue, whether it's issues with the supply chain, it's issues with HR, hiring, Great Recession, great retention, whatever it might be, commerce solutions, payments. All of this makes the world go round, whether we have a recession, whether we are looking at a bull market. So if you can find a niche, you can find your value proposition to deliver to corporates and showcase to us that you can expand our market share, expand our innovation, expand everything that our customers are looking for, there isn't really a limit to the opportunity that we're looking at. And by the way, so some of the corporates have a dedicated fund, some of the corporates only invest off the balance sheet. So investing off the balance sheet means, we can be flexible. There are less restrictions around check size, pace of investment, though it could be, 1 investment a year, or it could be 12 a year. You never know with corporates.
this is a great time to build, right? Think about the last major, I would say, correction was the year 2000. After that, Google, AWS took off, right? If you're a serious builder, this is a great time, right? Find a real problem to solve. And there's much less competition, much less noise. Money is still there.
Okay.
A lot of funds has raised a lot of money, but they are more cautious. They are looking for the real builders. Yeah.
It's good to know that their money is still there. Sallie, you mentioned an interesting point. I'm not sure everyone understands the difference of investing in a corporate separate venture versus balance sheet. And what does that mean? Like, how is that different for a, let's say, founder who's coming to you? Is there a difference between the types?
Sure. So with venture capital funds, traditionally they will go out and raise a fund. Maybe traditionally it was every 5 years or so. Now it seems like every 2 or 3 years because there's so much capital out there and they have a very high investment pace. Maybe they're investing into more, there are more opportunities out there as well. So these traditional venture capital funds are raising capital every couple of years, and when they go out to raise a fund, they are opening up to LPs, limited partners who are investors. And when they go out to them, they have a memorandum, a memo saying, you know, this is a criteria we're going to invest in. These are the types of investment strategy we have. And so they have certain, almost like guardrails when it comes to venture capital investing. So maybe like, for example, like A16Z, they have a crypto fund, so they are only allowed to invest in crypto in there, or a gaming fund or something like that. Versus corporates, it's so much more about an evolving strategy around, you know, what is it that our customers want right now, what is missing on our product roadmap, what is like bidding out taking a lot of our market share even, so what can we acqui-hire. So you can be really, really across the board with corporates, and corporates have a lot of different stakeholders as well, not just their customers, but also our executives and different business teams and products, and so they might prioritize different things throughout the year, throughout different cycles, throughout, you know, you name it. And I think, you know, kind of going also in that direction, the reason why some folks would like to bring in corporates to their cap table rather than traditional VCs is that we offer a lot beyond where traditional VCs might be able to offer. We have three things I kind of point out around, like the go-to-market side of things, the technology side of things, and then it's like a stamp of approval that you're getting a corporate that will help you not just with capital, but also to commercialize, help you develop relationships with partners and customers and internally, and get that mentorship, whether it's on the sales side, business development side, or on your product side with a big, you know, software company, hardware companies that are up on stage.
Interesting. Yeah. James or Raymond, anything to add to that, or?
I mean,
Go ahead.
clearly we're biased, right? I think Microsoft, at least M12, we have a dedicated operating bench that sits in Seattle, and their sole job is to help our portfolio companies connect with Microsoft execs on a quarterly basis. So one, we provide signal to them on what are some of the products that our Microsoft execs care about. But it's not just Microsoft itself, right? Microsoft has an ecosystem of Fortune 500 customers within their umbrella as well. So not even, GitHub, LinkedIn are the obvious ones, but we're constantly talking to other financial services, banks, and we think we provide a better view and insight to our startups. So like, hey, this is where the enterprises are thinking, this is what they want, and package that up so that our entrepreneurs can be a little bit more prepared for these customer calls. And obviously we have a lot of funding as well, so if you're building anything interesting, I'm here.
Basically, reach out to him now. Run.
Yeah, it's typical you go for a CVC, corporate VC, for the brand, for the distribution, or for the marketing insights, right? We changed our business model a bit last year, as I mentioned earlier. We said, okay, we're going to lighten up our decision. All the deals just require one single managing director approval, and we make a decision in a few days to a week. And afterwards, we'll put a massive platform team to work for you. They do HR, recruiting, they do marketing, they do sales, they do BD for you. And the sales, very simple. We have a portfolio now of about 200 companies. So we discover opportunity inside the protocols. Of course, we do okay. We discover opportunity in the mothership, right? But such a large corporate is going to take many years, right? We're going to discover those for you, but at the same time, when you are so early, you go after the smaller companies. We're going to help you do sales. We're going to help you to do recruiting. We have a separate budget, hire a recruiter for you. So this is what we do. We change the model of the CVC.
And so for the folks here, I mean, you guys said you guys are investing and you're looking for builders. Can you maybe give us some of the types of builders or industry categories that each of your organizations are looking for, that who should reach out to you?
Yeah, well, I'll give a softball answer because it's very attuned to the Microsoft ethos, which is how do we empower developers to build more securely, interoperably, scalably, reliably. So if you're building in that space, that's clearly something that's aligned with the Microsoft ethos, and GitHub and LinkedIn are natural extensions. Personally, I'm interested in VAPs, vertical dApps. I might have just coined that, but right now there aren't that many enterprise use cases that I can think of beyond financial applications that are being built on the blockchain. I do think that's a natural extension beyond, like, what's the next phase of the growth of Web3. So VAPs and infrastructure plays are interesting to me.
What are some examples maybe of VAPs or infrastructure plays that you found?
So interestingly, I think some insurance businesses, which arguably is a financial application, is leveraging on-chain data and then building into business logic, into smart contracts and automating payments, automating remittances and whatnot. So that's one idea. I'm sure the smart people are in the crowd today, so I'm excited to learn more about actual enterprise use cases of the blockchain.
All right, cool.
I love the VAPs
Yeah,
term.
VAPs.
I'm throwing around acronyms.
Yeah. It's like vertical SaaS, but with dApps. So for us, we don't touch a lot of like regulated industries. So we are not doing like the crypto, DeFi type of products, but we are interested in enterprise use cases. In software solutions that deliver to the enterprise. And when I say enterprise, I mean Fortune 500s. And so, beyond some of the financial services applications, I think about, supply chain. So, for example, a supply chain, you can use blockchain to track and trace the provenance of something, the authenticity of something, to track, even in Second Life, the circular economy of a product, whether it's like the textiles or the materials that are coming through to, fair trade. For example, we worked with Bumblebee Foods at SAP to create a solution that could help them track and trace that their tuna is actually tuna, and real applications in supply chain. In commerce, we're starting to see applications in commerce too. There are, COVID has changed everything about shopping online and brick and mortar, right? So if I'm able to walk into a store and digitally, and it's exactly a replicate of my favorite physical store, and I can shop in this immersive environment, I can try on things on my virtual avatar. Those are all possibilities to deliver more on shopping, retail, increased shopping carts conversion, you name it, on e-commerce. And then I personally been diving a lot into future of work. That's another trend that COVID has completely changed and transformed. You're working in a hybrid environment, you're working from home. You're probably missing that face-to-face interaction. So how can we make it easier for you to collaborate, interact with your colleagues, if you're a salesperson, to better sell and deliver through on sales. And then, a lot of people are getting hired in remotely. They never go to the office. They never see their colleagues in person. So how can we enhance that employee experience, help them learn better, train, onboard, and retain them throughout the life cycle of their time at a company? So those are all applications, and that's more on the metaverse side of things, or the blockchain side of things for us.
We invest in about 6 focus areas, very broad, right? 3 technology areas: blockchain, edge computing, cloud, native DevOps, and AI. Those 3 technology areas. And then 3 application areas, media tech, digital health, and the fintech. You can see Web3 basically cover all of them. If not today, will be tomorrow, right? Some of the examples that I will only mention, like Chainlink, they are ecosystem companies. Like we invest in space and time, right? They are basically the Web3 version of a data warehouse, right? That's exciting. That's an infrastructure play, right? Or invest in Krypton, right? Both of these have a news announcement this week, right? They are basically solving the miner extracted value problem, basically some arbitrage situation in the exchanges, right? They make that more transparent, more, I would say, friendly to small investors. So those are the examples that's why we like, the Chainlink ecosystem, right? Because here you find more serious builders here, because this is where the data are gonna be. Yeah.
That's true. You're now talking about the build program we just announced earlier today in the morning. So very excited to congratulate Space and Time and Krypton, both the investments that you have made. Any other reasons or why you guys have chosen to work with the Chainlink ecosystem?
Well, first of all, we also invested in Space and Time. He stole my thunder. So I think working with Chainlink startups, for one, we know that for a fact that they're well trained, they've gone through the program, they understand how to partner. I think that's the hardest part, because when you partner with other Web3 companies and partnering with Microsoft is very different. It's a very different muscle. So that's why our operating team is there to navigate the behemoth that Microsoft is. Maybe you're not talking to the right person, maybe you're not talking to them about the right points. Like those are all insider information. I don't want to call it insider information. Those are all insights that we can relay back to you guys. But broadly, I think Chainlink is obviously one of the core infrastructure plays within Web3. And because Chainlink has gone through the ups and downs of crypto, a lot of the startups can benefit from your insights as well.
Yeah.
And broadly, Chainlink is an ecosystem of tools, and startups that use Chainlink obviously have thought through, hey, how do I offload some of these core infrastructure and just partner with Chainlink so they don't have to rebuild it. So another sense is, they're smart. They're trying to provide and gain operating leverage.
Yeah, very true. So going back to earlier, we were talking about the Web 2 and Web 3 differences. As a startup coming to you, what should they know that that your web, they're not like they're corporate VC, right? Like, what should they be doing differently when they pitch to you?
From a pitch standpoint, I don't think they have to do anything differently.
No.
No, I mean, you find your value proposition, you talk the talk. I do think one thing that was important is a lot of times when you're in this Web3 echo chamber, you just assume that corporate VCs or corporates are on the same level of understanding. I found that to be not true at all. And so maybe starting from ground zero and assuming going in that you have to start from the basics.
How basic?
Oh, what is blockchain? I'm joking, but obviously you got to do your homework on who the right constituents are, who you're pitching to, and be clear from day one, like how can you help Microsoft? Because Microsoft is looking for Web3 startups to be their advisors almost. You'd be surprised, like yes, Microsoft's really good at what we do, but for Web3 it is a new avenue. So they're leaning on us, M12, but also our startup portfolios and also companies outside of our ecosystem.
Wow, so it's a reverse kind of symbiotic relationship where you're actually teaching Microsoft, maybe.
I think those are the best partners for us.
Oh, wow.
And then it reverses back where because you're into the ecosystem so early, you have influence on some of the discussions. And better yet, if you're an M12 portfolio, you're always front and center and top of mind for execs.
Wow.
Yeah, I would say that I do think you need to pitch differently to corporates, because a lot of corporates have a strategic angle in working with startups. So you really need to show that you're going to add a lot of value. You need to show that you have use cases for us and you have the right technology for us and for our customers, whether it's to integrate with our solutions or integrate with our customer solutions. Like, it's really important for our lens on your product is much more than a normal VC would look at your product. So it needs to be like strong enterprise grade ready for us, and also we need to see that you are complementing us, doing something for that we're not already building out, that you're building out something that will really enhance what we have, our portfolio, and really deliver to the customers. So, it's important. I almost think about, for us, we also want to see, do you also have the potential to sell to the enterprise too? What is your market potential? And if, a lot of founders love their product, and you need to not love your product. You need to love the problem more than the product itself. So you need to live and breathe like, what is a problem that is really out there, so that you're creating a product that fits and solves for that problem, rather than building out a product in your own what is it called, sandbox or whatever, in your own silo, right? You need to figure out what it is that others want. Because at the end of the day, it's about how can you sell it, will you be able to sell it, and will it really move the needle for the corporate as well? So that's a differentiator, like having that amazing product that delivers.
Yeah, I just add to both James and Sallie's points, right? Be bolder, have a bigger vision, because you are talking to corporate, right? Very likely it's going to be Web2 corporates, right? Most of the time. You have to say, okay, if you give me all the resources, in 5 years, I'm going to be as big as you.
It's bold.
Right? Be bold. Right? But then you get their attention. Okay? Right? Of course, these days, you are talking to the corporates, but you have to do your homework, obviously. Right? So have some, I would say, don't hype too much. You are bold for the vision, but you need to also be pragmatic. Okay? How much you understand the problem. Right? You can make assumptions, but then how you get there, think about the story there.
And then when you're investing in, the companies, how do you think about a Web 2 startup versus Web 3? Since you guys have done investments in both types, what's the difference?
Raymond has extensive investment experience across Web 2 and Web 3. So.
Okay. You want me to go first? Then nothing left. Well, Web3 has unfair advantage, right? First thing, you are printing your own money, right? There's incentive there. So you can bypass the very major headache every founder of Web2 face is, how do I turn the flywheel? So at least you say, if I don't print my money, someone in the ecosystem, some of the layer 1, layer 2 have already printed money. They're going to give me the grant. So that's your unfair advantage as a Web3 founder against Web2.
So you mean the tokens and the...
someone will give you the token. Now use that to incentivize your customer. Because otherwise you face the chicken and egg problem. Okay? And this is because your early product will be crappy. Okay? Not good. Why would your customer use it? Oh, they can earn a few tokens. And then the flywheel will start turning. Okay? But then you have to pay attention to the true utility. Don't hang around. That's why you are successful in raising the token. Right? We see quite a few of them. But then within half a year, the hype died down. So you have to be fast to land on the true utility of your product. Let it be gaming, let it be whatever, new media engagement for the brands. You have to really move quickly. Because you already have the early customers in, right? You need to continue engaging with them. So that's, to me, is the biggest difference between Web 2 and Web 3.
Yeah, I'm touching on that too. I think the mechanism for raising capital is so different for Web 3 versus Web 2 that Web 3 companies, a lot of them have raised so much money without even a product or a revenue model or customers. And so that's a huge difference. Like, hey, maybe there's a lot of crypto funds out there that are willing to just dole out this money on the bet that this token could be worth a lot in the future. But it's different with corporates. We're looking for, kind of going back to what it was, like, are you creating a product that sells and that actually has a application to in the real world? And so if it doesn't, not as interested. If you don't know how to sell to our customers, not as interested. If you have figured out the revenue model and the value proposition, that is really, it's the same thing in Web 2. At the end of the day, like, the Web3 company need to sell too, and not just selling tokens, but selling to like customers that are using the product, the utility of the product.
Mm-hmm. Do you use any different types of metrics when evaluating a Web 2 versus Web 3 company?
That's a great question, because I was going to say the biggest difference between Web 2 and Web 3 investing is valuation expectations.
Tell more.
And valuations. I think in some ways we're still figuring out what the Web 3 KPIs are and what the fundamentals are in Web 3. Like in Web 2, it's fairly understood that ARR growth, gross margins, those are fairly standard, but what's the new paradigm that we should be anchoring valuations on? And just to go back to the point, I do think Web3 companies sometimes when token too early, right? They just try to push out a token before they figure out the business plan. And that's at least what we're advising our startups, which is in an era where we are in a bear market, we don't have fundamentals to lean on, there might be a recession coming. At the end of the day, cash is king. So if you can preserve your cash while growing prudently, that would be my suggestion. Unless you're trying to raise capital, then
what are some of the metrics that people are starting to look at to evaluate Web 3?
Number of commits, developer usage.
Okay.
There is on-chain data around transaction fees, but the transaction fees data is kind of dirty, right? There's a lot of different things mixed in, so there's a lot of nuances and asterisks. So we use it as a yardstick, but we don't treat it as the Bible.
Oh, I see. Anything for you, Raymond or Sallie?
Yes, I think there's no good metrics, honestly speaking,
Yeah.
right? But that's why for Web3 company, we usually go very, very early.
What do you mean?
We go pre-seed
Oh, you really?
or seed. So then there's no metrics, right? So there we basically looking into the team. And then what is the, we don't look at, of course, the market potential, and then how much the team understand the problem space. Yeah, so those are the things, when you are so early, there's no metrics. Web 2 and Web 3 is the same, no metrics.
Oh, yeah, I say this jokingly, but I think in Web 3, the pre-seed, seed, and A and B have the same metrics. There are no metrics. So it's
That's right.
That's why we've also gone a little earlier stage for Web 3.
That's right. Yeah.
Oh, interesting.
Yeah.
And actually, so you're mostly you're pre-seed and you as well, and
We say A and Bs, but for Web 3, I think we do some seed.
what are actually the A rounds and seed rounds? Like, what are the sizes that we're talking about today? Because again, the world has changed in the last couple of months.
It depends, right? We've seen $50 million raises, we've seen $5 million raises for A's. It really depends on like what type of technology they're building and who they're talking to. Geography matters as well. It varies.
What are any trends that you've seen with geographies or like I know layer ones, for example, they're raising huge war chests. That was any others?
I see the trend, for example, decentralized wireless. That's getting more interesting. We like that because it's also the true utility. Because just for the what it is that today you hear about the 5G, but it's actually not really deployed yet. All right, it's going to cost so much money for the companies like Verizon or AT&T to really deploy all of them across the US. And then there's this new movement to say, okay, let's use blockchain to incentivize individual homeowners to set up an antenna on top, right? So that I think is catching up momentum because it's solving a real Web 2 industry problem. And then sort of everyone will be happy about it. Okay, so that's one example that we like. The other example, you see, we're all corporates, right? Where are the enterprise applications, right? They are not mostly on chain yet. It's just like early days of internet. Before you have a VPN, enterprise will not come. Or enterprise will build their own internet, for God's sake. Okay? that was the first era of permission the blockchain because that's enterprise were kicking the tire. But they know they cannot maintain this global infrastructure. So what they are waiting for? They are waiting for ZK proof. Yeah, they are waiting for the VPN to happen in the internet. Then enterprise application will come.
What do you think is the VPN for the blockchain space then? What kind of technology?
ZK proof.
ZK proofs.
Yeah.
What else? Actually, are there any projects or things you're excited about or in there?
Well, there are too many.
There are too many.
Yeah.
Go ahead.
Oh yeah, I was gonna say on the infrastructure side, and I'm clearly biased, I just think there's still a big gap, right? Like security, Web3 is still very much relying on auditing, which is a point-in-time assessment, but in Web2, they're shifting left. But in Web3, we should not shift left, we should just start left, right? So there should be automatic code scanning, remediation suggestions that are plugged into GitHub maybe, Copilot.
Microsoft product.
Yeah. And I just think, yeah, and also like monitoring, how do you ensure that your applications, your infrastructure, your nodes are reliable, they don't go down every other day. So unless that happens, which is why I'm so excited about this space, because there's a ton of opportunity, it's just a matter of who gets there first.
Yeah. It's all about the core building, right? There's so much infrastructure, base level stuff that still needs to be built before we can really, truly see it, blockchain the next internet, which we all believe will happen. We talked about some of what the corporates you're representing invest in, but personally, what else are you guys each excited about in the space? Any specific, ZKs, roll-ups or things or projects? Love to hear more.
So I talked about VAPs, but maybe a controversial topic is privacy, right? I think privacy is one of those things where people care about it until they don't, and they don't care about it until they do. So it's hard to predict where the market's going, or maybe regulation has to come down for that to be top of mind. But personally, I do think privacy is a key tenet of Web3, but today that's not being fulfilled.
Yeah.
Yeah, I think on that thread too, privacy and owning your own data and your own credentials, having the ability to control who gets to see that, who gets to see data about you, personal information, and also to be able to anonymize things when you don't want to be discriminated against or in a biased situation. I think those are really interesting applications. Personally, I also, I love the community of Web3 and the different DAO groups that I'm part of, the different conferences and hubs that are growing throughout the world that have this focus. And I think that what's really great about Web3 is it's still in its early stages. So anyone can come in, learn a lot in a very short amount of time, and be immersed in this world. And I think that democratizes a lot of opportunities, regardless of your gender, your religion, your social economic status. There's an opportunity in Web3, so I really love that part of the ethos.
Yeah, I talk a lot about enterprise applications, right? But Samsung as a consumer electronic company, and also personally, we feel occasionally when we see a real case that is really, I would say, going after or they define a new consumption behavior. That's very exciting. That was early days. At that time when, my team, Patrick, he brought Dapper Labs to me. I look into that. What is it? I don't understand. There's no crypto kitty, but someone is willing to spend $1,000 to buy that thing. That's a new consumption behavior, right? And then they say they have a flow to fix the congestion they generated. Oh yeah, right? So we are. I mean, in many cases, you a startup want to go directly to consumer. It's very hard, right? But you can define a new consumption behavior. That's going to be very exciting for us.
Yeah, CryptoKitties and then Top Shot, and who would have thought we're NFTs
right.
where we are today?
Yeah, but then Top Shot is actually very meaningful because then they serve the brands. Then it's enterprise, right? It's a brand.
Raymond, I have a portfolio of NFTs I can sell you.
Same.
So we're going to go to audience Q&A, so think about your questions. So last one before we turn it over there. What is the one piece of advice you give to a founder who's trying to pitch to you?
Be genuine. No. I mean, at the end of the day, especially as we shift to earlier stage, we're betting on founders. So
Sure, no metrics, right?
it's not metrics, but it's also like a long-term marriage. So I want to know that through thick and thin, we can be partners for the next 7 to 10 years.
Wow.
Get adoption. Make your product easy to understand, use, and sell it. And make it easy to sell to others and for them to understand what it is and get it out there.
Community. Web3 is about community. Okay.
That's true. All right, so question time. In the back, shout it. Come on up. Well, actually, why don't maybe like you can line up if over there if anyone else has the next question. So we'd be in a. Oh, actually, Mike. Great.
So the question was, in Web 2, some like examples of metrics or fundamentals would be like LTV minus CAC or ARPDAU. So do you think those are like fundamentals that we can port over from Web 2? Because that's one of the things that we're struggling with also is like what do we put in this investor update deck, right? What's a good metric here? So just wanted to hear your thoughts on stuff we can port over from a metric perspective.
Yeah, we'd love to work with you on that, because we're actually thinking about it more deeply, right? Because whenever we invest, Microsoft Corp looks at it and like, well, what's the reasoning for this valuation? So LTV to CAC is one example of something that we can probably port over, but like I said, I think there's a lot of nuances within the metrics. Like fees are not just fees directly to you, there's net fees, there's all these different protocol revenues and what have you. And then acquisition is probably more direct. But again, you can only track what's on chain, right? So there's always the apples orange question. But I'm super passionate about how to be more data driven. So if you have any thoughts, we should link up.
Yeah, add to that, I think it's going to be something related to that. But in Web3, you are dealing with cryptocurrencies. The currency fluctuates quite a bit, right? You basically, it's not US dollar denominated anymore, right? How do you assess that, right? But at the end, it's sort of, but you as a company has to pay attention to that anyway, right? Because there's inflation, there's deflation, right? Currency, can drop now 80%, 90%, right? So can you handle the stress test? Can your ecosystem handle that? Is there enough money for people to spend a few hours on your application, right? So those are what I mean by stress test.
Yeah. Right. Next question. The lady in the black.
Thank you. My question is, if you were a founder right now, will you raise right now or you wait? Like we're building enterprise-ready APIs to manage private keys, right? So we have LOIs, and we're just like, we want to deploy and actually have like real feedback. But the question is, if you were a founder now, would you raise now or you just wait to get, that traction?
I think it depends on what stage you are, what stage is the product. Do you have runway? Are you going to make it to the next cycle? So I think it's really dependent on just the personal situation you have. Obviously, right now is not the best time to fundraise because you're not going to get the best valuation unless you're like, a rock star, L1 that's already blown up, right? So if you're early stages, it's like Raymond said, get to growing and building your business.
I think in Web 2, people would advise you say, you do not raise when you don't need the money, right? But in Web 3, some of the investors, they have a bigger ecosystem behind them, right? They have a bigger community behind them already in there. They can help you get in there. That can, accelerate your growth. Mm-hmm. So that's very different because Web 3, it's kind of unique, dynamics of the investors, right? The pure Web3 financial investors, actually they do so much. They may have a hedge fund running at the same time because once the token gets launched in the market, it's actually a hedge fund, public equity, right? In that regard, you can trade it, and they may have a research team doing a lot of work behind the scene, and they maybe have a large portfolio of layer 1, layer 2s, right? So you need to assess that situation. It's very situational, case by case.
Mm-hmm. Well, it's wonderful to see that we have a lot of builders and founders in the audience here. And for those of you, we do have a startup with Chainlink. There's a booth you can learn more about, which is kind of an accelerator program where we support builders and founders who are in the ecosystem in general. And then earlier today, Sergey announced the new build program where Chainlink is really supporting from other ways, the building of other projects, building with and on top of Chainlink. So feel free, if you have questions, come to me afterwards. But with that, I just want to give a huge round of thanks to our amazing teams.
Great.